Hello everyone, this is John from LOCKEINYOURSUCCESS.com. That's LOCKE in yoursuccess.com. And we help traders create income through options trading. And today I'd like to share with you a trade that we did this morning. It's a 0 DTE trade. And we do these every Monday morning with our trading market open webinars. And what we do is every Monday morning at 9:25, we, assuming it's not a holiday, we come in, we take a look at what's going on in the SPY, and we'll do a 0 DTE trade on the SPY. And we do these trades for the purpose of helping traders understand how to read price movement. Understanding how to read price movement is going to help you in every aspect of trading, regardless of the type of trading you do, regardless of the time frames you're doing. So, even if you're doing like the longer term income trades that are 15, 60 days long, you want to know what a good entry opportunity is. You want to, before you adjust, you kind of want to have an idea if a certain move is likely to continue, or if it's likely to fail, and to what extent a back and forth chop range might be. So all these things are extremely beneficial in helping you become a much more consistent, much more profitable trader. Before we get rolling here, just a reminder to please like and share our videos. Your support helps us to continue to bring you the wonderful content that we share with you each and every week. And one of the ways that we can do this is we have this trading market open webinar where we do two things. Number one is we are taking a look at what's going on in the marketplace. We're reading price action as it comes in live. We're making decisions on that price action, which is all wonderful. But perhaps the most powerful thing is we talk about how we position and how we trade these options in a way where we have a very small amount of risk and yet have the opportunity to make a very large amount of income. And again, these webinars are not meant to showcase what I can do. They're meant to teach and educate traders on really how simple it is, even in the 0 DTE time, 0 days to expiration time frame, to consistently make money in the markets. And like I said, we just do this every Monday morning. For me, it's just like fooling around. We'll throw a trade on, we will see how it goes, and we will just manage that trade. And a vast majority of the time, we make a significant amount of money, often 50+%, sometimes hundreds of percent. And the great part about this is all these skills are directly transferable to your longer term trades, whether you're swing trading, whether you're investing in stocks and are calling major market tops and bottoms, or you're doing a longer term, more market neutral, positive theta type of trade. This information is extremely powerful. So enjoy, and thanks for tuning in. So let's start here with the general setup. We're going to do this trade in the SPY, although I could do it in the XSP options, I could do it in SPX options, and they move generally the same, right? So it doesn't really matter which asset you're in necessarily. We're demonstrating these trades with very small positions so that people can follow along if they'd like, and their risk isn't very high. Coming into the day, if we take a look at the SPX, this is today's movement right here. Last week, we had a down move in the asset. We came into our weekly implied volatility level and also a pretty good support zone in the SPX, and we had a bounce there on Friday. This is a setup for a high probability of a continued move up. And really on these Monday morning webinars, when we do them, I'll take either direction. It's like I'll ask guys, do you want to go long or short today? Or don't you care, or don't you have an opinion? If there's no opinion, I just choose a direction based on what I think is most likely to work out. And if somebody picks a direction, I just run with it. Like, I don't care if we want to lose. We want to make sure that we're getting the education in and developing very highly skilled traders. Okay, so coming in, I didn't get an opinion from the people on the group, so I decided to go long. So let's take a look at what we were looking at in the shorter term charts. So this was the longer term charts. Usually before I come into trading market open, what I'm going to do is create a representation of the market range of the last trading day and the overnight. So I have this box here that's kind of gray, and this box is a representation of the bottom and the top price movement of the previous trading day, which in this case was last Friday. And then we have what we call the range of the futures over the weekend, and this was the range of the futures. Right before open, we're looking at something that looks like this. We're up near the top of the box. One of the things that you'll notice if you attend our market outlook is we have a bullish pattern set in here. We have essentially a cup and a handle forming. We have a general bias from the daily time frame that the market is most likely to go up. So on open, let's just see if we can get to the right candle here. I'm just going to zoom in a little bit deeper. On open here, what I did is I came in and I bought a 0 days to expiration SPY option. It was let's see, it was a 663. So generally, I think by the time I caught it, because one of the things I'm doing is I'm narrating what I'm doing live and I'm talking about what I'm thinking about and I'm going over various things. So I'm usually a little bit slow getting in. And that's the wonderful thing about trading in general and zero DTE trading. You don't have to be that fast. You can also make a lot of mistakes and still do okay, which are some of the things that I love about that. But the reality is you can really do that in any time frame. Like a lot of us get so caught up in, oh geez, I made a mistake, I didn't hit the exact top, I didn't hit the exact bottom, that you can't make money, or I'm afraid to be wrong, or all this other thing, right? So I'm just like goofing around here literally, but you can see the power in our processes are just so powerful that you can just goof around and make money, which is really cool. So once you understand how to pull that out of the marketplace, you can make money anywhere. So what we have here is we have an entry here in a 662 long option. Now that's all I had to do. And I could just basically sit on that in a day because I was pretty much right on the direction. But the wonderful thing about this type of trading is you can be wrong on the direction. Sometimes you prefer to be wrong on the direction going in, and you can still make money. And as we're going along, I do them at intelligent times, but I purposefully make errors. Sometimes I accidentally make errors. Like I said, nobody's perfect, but we do things that I think may get the trade in trouble because we want to make sure that we're not always going to be able to call everything at the right time. We want to make sure that we can make errors, we can get out early, we can do stuff in wrong directions, maybe even make a wrong trade and still make money. If you can do that, you can make money anywhere. So what I did here is I entered this position here, and just so you guys see the trades, these are the basic fills that we got, right? Everything else I'm going to show you is going to be on the analyze graph, and I'll show you when we went in. But we went in here, and we went in with this 663 call. Had we done nothing, we'd be up 368, and everything would be wonderful. Now, the reality is in trading, we get price movement back and forth. People get nervous. They jump in and out of trades. They might close early. Maybe they don't want to watch the market all day. Maybe they only want to watch part of the day. For me, when I do trading market open, I have another webinar at 11 o'clock. So I'm in at 9:30. I pretty much got to be out at like right around that point, right? So I'm not going to necessarily hold this position open all day. Although sometimes if I lock it down, I will. So we'll do a demonstration of that. But this is what I had for my opening position. Then, if we take a look at the charts, as time went by, our expectation on this move, by the way, is up into here, right? So is up into this range here. And we got our move up into our expected range. And then when we got into this bar here, like this is like a reversal bar at an expected resistance area. When I get that bar, I don't necessarily have to sell the position. But it's likely that the market's going to go down. So when I break these lows here, then I might want to look at doing something. I could sell the position and take my profit, or I could play around with it. So I chose to play around with it. I come in here and I sell a 664 option. Now the power of what I did here is that I've now taken all my risk out of the trade. I think we were up like $78 or $80. So for perspective, this started out as a $231 debit. So all I had in the trade was $231. If I do nothing and the market goes down to zero, I lose $231. So it's a small trade. Also, the amount I could make on the trade is, 100% is a very good reality. 50% is generally fairly easy. So anyway, I'm here. I could walk away from this at this point. Worst case scenario, the market comes down, all my risk is out of the market. I basically break even, make a small profit on the trade. If the market happens to stay up here, I make $113. That's almost 50%. That's a decent day for how many minutes? It was like 15 minutes, 12 minutes. What I'm trying to do is I'm trying to get some of my risk off the table with this down move. So our expectation is that it's probably going to come down into around this area and then probably bounce. Doesn't always come down to that area. If it keeps going and I can't catch it, it makes 113. And of course, if it goes a lot, I can always play the downside whenever it retraces. Like we can play this all day long. Depends on how much time you want it to put in the market and how much you want to play with it, but we can do this all day long. And we can just work around whatever the market does. So anyway, I sold that option and I went into this position here. Looked like it was going to bottom here. So I bought it back. I decided to put my risk back on the table. So I basically came in here and I bought it back. I sold it for 244. I bought it back 221. So I took a little bit of, I'm in the same trade. I just took a little bit of money out of it. Then I made a mistake. I wanted to plan for an up move, but instead I ended up selling that off. When we do that, we want to back out of our position. So I backed out, what was it, the next 2-minute time period. So I backed out of that and went back into here. So I'm back in the long call, but I got a little bit more value in it because I kind of had to chase it a little bit, right? So one of the things that happens with us, especially when we're doing like live trading and we're doing it, especially on short-term time frames, but this could happen even on a longer-term time frame, but especially on the short terms, you might buy or sell something that you inadvertently, and it's the wrong thing to do when you have to back out of it. That was the case here. When it does that, it costs us a little bit. Again, you don't have to be perfect to make a lot of money. And that's what the wonderful thing about this. So as we move here, and this moves on, it's basically holding. And we come up into this area here. So this is like a very normal move, and everybody should be like aware of that, right? We come down, we retested the swing low, we put in a bullish candle, we broke higher. That's bullish, right? That's one of the reasons we definitely had to back out of this mistake that we made. Then we run up to here. That's normal. This is actually a decent point to sell that because my profit target would be there, or do something different. I was just holding it. We're waiting for it to come out and break higher, but now we were getting some resistance to breaking higher. And again, just like this cup and handle pattern here that broke out, this is also another cup and handle pattern that tends to break out. But let's just say that we thought the market was going down at this point. Okay. We can come in here and we can sell, again, sell another 662, and you could play the down move if you want to. And we could call it a day. But what we ended up doing, actually, we would have got 78 out of that because we're not looking at we're not looking at where we would have a real T+0 line. The T+0 line was up in here somewhere. So we were up at like $80 or $90 at that point earlier in the day when this was done. And our plan was to come down and buy back this lower option, get our cost basis down, and then play the up move. As you can see, though, I could stop here. I could make money, like regardless of if it was a mistake, if I did it on purpose, I was wrong about what happened. You can see that we're putting risk in the market, and we're not keeping that risk in the market for very long, and then we're taking the risk out, and then we're intelligently putting risk back in the market, and then when it makes sense, we take the risk back out again. Okay, so what ends up happening here is that we do pull back a little bit, but it doesn't stay down, right? It wants to go, and then we get this breakout move. The market's going up. So since the market's going up, what I ended up doing is, and this still had value in it, right? So this still had like, I think it was $70 when I closed it, of value in it. So I closed this out, and yeah, I had $72 when I closed it out. So I closed this out, and I buy this 666 call. So now I only have $109 in the market, and I'm still long the market. And then from there, what ended up happening is this continued higher. And I ended up closing it out when we got up into this range up in here for two reasons. Number one, we were at a range where the market was probably going to stall for a little while. And then the second reason was because it was time for me to go, right? So I had planned to trade this until about quarter of 11, 10 minutes of 11. It's 10 minutes of 11. It's time to go. Close the trade out. And we end up making about $103 gain minus 65 cents an option here for commissions. So about $100 gain in from 9:30 to about an hour and a half, right? And percentage wise, we did briefly, because I made this mistake, we did briefly have 262 in it, so it's greater than 30%. So it's like a 40% return in that time frame. And of course, if we played this the rest of the day, easy 100% return on our investment, because you're going to play the pullback and then the breakout, right? So that's what we have, Trading Market Open. We do that every Monday morning. And again, it's done in the context of educational. I would say we profitable a vast majority of the trades, even though we're just kind of goofing around, making mistakes and taking direction sometimes at random. But that's just the power of being able to read your price movement and being able to do things positionally to get your risk out as quickly as possible, and when it's intelligent to do so. So hopefully that was helpful to you guys. And if it was, please consider liking and following us on subscribing on the YouTube channel, and also consider our memberships. In our pro membership, we train traders on how to understand price action and how to positionally put themselves in a position where it's very advantageous to them, meaning it's almost hard to lose. It's certainly hard to take a really big loss. And we also try to leave ourselves opportunities to make big money, which we do quite often. So hopefully we'll see you there, and thank you for joining me.